Hi, everyone. I'm Claire Arment, Vice President, Risk Management for High Plains Farm Credit. Today, I'm joined by Jeff Carr, our Chief Strategy Officer. We wanted to look back at 2024 and quickly recap the economy, interest rates, and Kansas ag commodities, but also want to discuss where we think things could be headed in 2025. So let's dive in. Jeff, when you think about 2024, what was your biggest takeaway regarding the overall economy?
Yeah, hi Claire. And I think my biggest takeaway really was how resilient the U.S. economy proved itself to be. When I look back at 2023, late 2023 and early 24, the narrative was around the Fed and the fact that they would have to cut rates early and often throughout 2024 to really prevent a recession. And that really wasn't the case, right? I mean, we started the year a little slow from a growth perspective, but the second and third quarter GDP were around the 3% range. And so that's strong, good growth. And you think of the labor market, that continued to be a strong labor market as well. For the most part, for 2024, we remained under 4% unemployment, which is very strong. And so, my key takeaway was really how resilient the economy was.
Absolutely. The US economy actually remained relatively robust throughout the year. And as you mentioned, GDP growth was strong. I mean, it was a slowdown from previous year, but the consumer seemed quite resilient and really kept spending. And that led the FOMC to be patient in their path for shorter term rates.
Yeah, absolutely. And the Fed has two mandates, stable prices or low inflation, and then full or maximum employment. And so, as they were fighting that fight with a fairly restrictive monetary policy, they're fighting the inflation fight. They could be patient as long as the labor market remained strong, and that's what they were. They were patient, and September they finally cut rates, short-term rates by 50 basis points or 0.5%.
Right. And kind of looking back at that decision, it seemed the Fed was concerned about the recent uptick in unemployment at the time. Chairman Powell even mentioned that the risks had shifted to be more balanced, and they were actually no longer just focused on bringing down inflation. And from there, they went on to cut rates another 50 basis points for a 1% total reduction in the Fed funds rate.
Yeah, and one thing we should probably mention is, when people hear that the Fed's cutting rates, I think they have a tendency to believe that all rates are coming down, and that's not necessarily the case. And, what we saw in the latter half of the year is as the Fed began cutting rates, long-term market interest rates remained high and actually increased at times. And so, that became a headwind for our customers. They had to fight that as they thought about purchases and expansions and those kinds of things. And so, one thing I'd like to show maybe is a quick chart on what I'm talking about here. But what you see in the upper left corner here is going back to 2022 when the Fed began that fight against inflation post-COVID. Inflation had got over 9%, and so they became very restrictive on their monetary policy. And you see the Fed funds effective rate go up pretty dramatically and pretty quickly. And then they maintain that level for a period of time. And if you look over to the right, I've carved out 2024. And what you can see here is once the Fed started cutting rates in September, as you mentioned, they cut 100 basis points. Well, the long-term 10-year Treasury has actually gone up about the same amount. And so I think that's important to note, because I hear all the time that the Fed's cut rates. Why are long-term fixed rates still high or even increasing? And so just wanted to point that out.
Yeah, no, absolutely. Thank you for sharing those charts. I don't think we're maybe going to see much relief in 2025. Um, Currently, markets are only pricing maybe one or two cuts by the Fed, which, that's in line with the FOMC's most recent summary of economic projections, too. And I think we both think that longer term rates will remain elevated as the markets sort out all of these policy changes from the new president. Will there be tariffs imposed? If so, how is that going to look? Will that make the inflation fight last even longer? Things like that.
Yeah, absolutely. Lots of big questions to be answered yet, right? And if you think about those policies when it comes to trade and immigration and just think about the ag sector and Kansas commodities in general. Some of our most important trading partners are Canada, Mexico, and China, and those have all been in the headlines. And the immigration policies, what does that mean for the labor supply issues that we've faced in the ag sector for years now, right? And so I do think we're a little early to tell, how that's going to impact the overall economy at this point. But if all that isn't enough, we still have geopolitical tensions across the globe, whether it be Russia, Ukraine, the Middle East, or whatever. Those will impact the U.S. economy to some extent as well.
Yeah, absolutely. I mean, spot on. But switching gears a little bit, let's talk about commodities in our local footprint. Ag commodity prices definitely experienced a decline due to record high production levels and even some favorable crop expectations looking forward. Key commodities like corn, soybeans, and wheat saw significant production increases, which exerted downward pressure on those prices.
Yeah, and weather's always a big story, right? I mean, we've talked about drought conditions in Kansas for a number of years, and producers faced drought conditions early in the growing season, and we did see some rain late in the year, which was welcome sight. That definitely helped improve some yields on certain crops, and so that was a sight to see. But even looking at the cattle market, they face some drought issues as well, but that's a bright spot for sure. Cash cattle prices are strong and remain elevated in 2024 and early into 25, and fed cattle supplies were low. Demand for beef is just crazy good, and I just don't see anything in the near term that's going to correct that too dramatically at this point.
Right. Yeah, cattle prices were definitely the silver lining, I think, to last year. But when you combine, low grain prices, high input costs, fewer government payments, we definitely saw a decline in overall farm income. So something to keep our eye on in the future for sure.
Yeah, I couldn't agree more. I've been in farm credit for 27 years, and I've learned that ag producers are resilient. And we started this conversation about the economy being resilient, but ag producers will find a way and work through their issues. But as you mentioned, it's definitely something to keep an eye on. But so, Claire, as you think about the ag economy and what's coming ahead in 2025, what are your expectations and what do you think people should be thinking about?
Sure. I think Kansas farmers could see continued strong demand for grains and beef, though global competition is going to weigh on those prices for sure. Managing those input costs are going to be key, especially if energy prices continue to rise. And weather, like you mentioned before, weather is always that critical piece. Early forecasts suggest another dry spring, so planning for that moisture variability is going to be essential. And always utilizing risk management practices, adapting to the changes through maybe sustainable practices and adding technology, that will all be crucial. As for lingering supply chain disruptions, we're seeing improvement, which is great, but resilience and diversification are going to be key strategies moving forward.
Yeah, absolutely. And if I could go back to interest rates for just a second,
Of course.
I think it's important that as farmers and ranchers are planning for 25 and beyond and doing some analysis that they stress borrowing costs because I think we're probably in an environment where we're going to see these rates remain elevated for a longer period of time than we once thought. And so I just think that's important. And then also maybe evaluate all loan products. There may be some loan products that you haven't utilized in the past that may make more sense today than they did previously. So, I'd encourage folks to reach out to a High Plains loan officer and they can have those conversations with you and evaluate all those options that may be most prudent for your operations.
Yeah, absolutely. I mean, that's really all we wanted to chat about today, anyways. But hopefully, this conversation has been helpful in some way to those who are listening. And as Jeff mentioned previously, always feel free to reach out to a loan officer and discuss any needs that you might have.
Yeah. And Claire, thanks for the conversation today. And, we at High Plains Farm Credit look forward to continuing to serve rural America and the Kansas farmers and ranchers out there. And again, thanks to everyone that's listened today and from the entire High Plains Farm Credit team. We wish you well and hope you have a great 2025. So thanks, everyone.
Thank you.
Bye.